Hi, welcome to Market Alert for Monday the 12th of February 2018. So starting off with the pound, we see this moving lower. A little weakness around here at the moment with all of the Brexit negotiations going on. It's starting to look quite weak for the pound. Big drop on Friday, as you can see here, 150 point drop there for the pound, but it's been sideways to higher on the overnight. And in the daily chart you can see how the 138.35 was taken out on Friday. It closed below, but now we're back above it. We're also below the 20 bar average as well, so it's starting to look fairly weak for this market. The bounce in the dollar index continues, and again, this is why you're seeing the pound move lower. So we've got this potential area. Should we get a bit of a bounce, it's going to be interesting to see if the market can hold above this, but certainly going forward, at the moment it's looking rather weakish for the pound unless something comes out that will drive this market back to the upside. And even the reports on Thursday of last week of interest rates having to go up sooner than anticipated didn't hold this market. So there is some weakness around at the moment, and the dollar starting to gain some momentum as well. And in the Dow, it was a wild ride. I've still got the settings in here from Friday, 44 and 44 there that you can see, but it was absolutely wild. Things have calmed down now, but Friday it was in, out, in, out. It was the okie dokie, and then eventually the market found some sort of movement to the downside. It's 850 points to the downside. And then, of course, the plunge protection team, no problem. What would you like us to do? We'd like you to buy. And that's exactly what happened. And the market comes back 1,000 points plus to bring everything back to an even keel. And there's no way, I have said this many, many times, this market's going to continue to move back to the upside. But it comes with a caveat, which I'll explain in a minute. So we've got huge volume on Friday. The market's tested. It came back to the 76% retracement there as well, which you can see came through it and then went back through it, and now we're moving back to the upside as well. So I'm just going to have a play around here and just clear things up a bit, just to make things a bit easier. Let's draw in 76% here and 62%, because this is an area where the market's likely to find some sort of resistance there as well. So keep these two in mind. And there's also a bigger picture here as well, from this high to this low. Also watch these two areas as well, because there will be resistance there. Now the market, I believe, isn't going to go much lower than what it's already got in the short term. We're going to see the dead cat bounce scenario, and the reason for that is quite simple, and that's to do with the implied volatility. It's doubled and also dropped on Friday as well. Given the amount of volatility in the market, it actually pulled back. So this is a clear sign. Anybody that's buying put options now are going to lose, unless they're in the money, but they're not going to be in the money for long, because this market's going to work its way back to the upside. And when you look at the further out time frames, you see a big spike in the volatility here. This is reminiscent of the 24th of August 2015, when the market lost 1,000 points in the pre-market session. There's a video on the YouTube channel covers this way back then, and you can see that we've been in a range in the volatility for a while. Now we've broken out, and this big spike for me says it's over. A lot of the pundits and everything else thinking that the market's going to go low. I don't think so, because the implied volatility has doubled. And when you look at the 2006 to 2017, 18, you can see there the market having broken out of that volatility range. Now normally you would say this would go higher, but because the implied volatility is doubled, as you'll see on all, or more than doubled on all of these other occasions, the market then removes the selling ceases, and then the market makes its way back. This is the crisis of '08. But what's interesting is this situation here that we've got beforehand, which is 2007, before we got into the 2008 crisis. And I think for me, this is what we're seeing. There is weakness around. We're at the end of the business cycle. They're raising rates into the end of a business cycle. So I'm not saying it's going to go back and put another 20,000 points on. What I'm saying is watch it as it does move back, because it's going to see some potential weakness as it does. It's for me, it's 87, 2007 price action that you're seeing there. And also, one other thing I'd like to just throw in the mix here as well. Let me just grab this for you. Yesterday afternoon, I was just looking around and seeing what was going on, and this is the interbank loans and commercial lending between banks, and this is provided by the Federal Reserve Education site. But if you notice over here, this is from 1975 all the way up, and let me just minimize this, and you'll see that since the crisis of 2008, the loans between banks actually dropped off markedly from the highs of around 500 all the way down to 100. But what's happened here, I noticed this sudden drop this year, and based upon the fact that we're only a month into the new year, or just over 6 weeks. What's interesting is, why have the banks stopped lending to each other? We've gone from this 60 to 70 range, which we've had in place for a long time. All of a sudden we go down to 13. So what's going on? Why have the banks stopped lending to each other? Is this something to do with the sudden drop that we've seen in the stock market? And again, this is what makes me nervous about the market moving back to the upside. It's going to, but how long for? And when you see this behind her, is there a banking crisis coming? Why is it we've gone from this situation here, where it's been fine, it's been holding above 100, dropped down to the 60 level through 2015 to 2017, but all of a sudden we've had a massive drop off in the interbank lending. The banks lending money to each other, or between banks, has fallen off a cliff. That is a massive drop, and that happened on one day, on the 3rd of January, and then we've seen this correction in the stock market. So again, even though I'm bullish on the market bouncing back, dead cat bounce, watch those fib levels, because if any more news comes out about this, well, we've not had any news yet, it's not been reported by the mainstream or anybody, but it was something that I found over the weekend, and I would keep an eye on this if I were you, because this really is something that I've never seen before, where you've got the banks not lending to each other. Such a precipitous drop in the lending rate here from 60 down to 13. That is something I've never seen before, and that didn't happen before the 2008 crash either. You can see there's a bit of volatility. Actually, we're worth looking at in more detail on this one. Okay, so here's the chart, and the drop in the lending between banks occurred after the crisis, whereas here we're seeing this happen before there's any crisis or crash in the market. So this is a very interesting picture there. Thought I'd just have a quick look at this, and definitely it came in August of 2008, and there you can see it dropping off, but only down to the 100 level, where it stayed until we saw the drop on the 3rd of January there. And finally, let's have a quick look at Bitcoin, sideways for the weekend. You see the market moving up a bit of a correction going on here, and again, if the market moves lower, so from the low to the high, that's what you're looking at there. If the market pulls back, that's the area of support that you would be looking for if the market does come back and moves back to the downside. I would expect it to trade sideways for some time now before moving back up, having given back 70 or at least 70% of its recent move. Right, that will do it for this one. If there's anything to report, I will let you know, but other than that, as ever, thanks for watching. See you in the next one.